Howdy y'all, Mike from Mortgage Nerds here in Appleton, Wisconsin. I am with
Pam from Mortgage Nerds in Appleton, Wisconsin.
Yes you are. And today we're going to be talking about what to do with your tax money, your tax refund if you get one. Hopefully you're getting one.
Right.
But if you do get one, I think I know the answer to this, by the way.
Okay.
What to do with it? Buy a new car.
Yeah. No.
No?
No.
Dang it. All right.
No.
What are some good options with your tax refund to utilize it properly
Yeah.
to build wealth?
Buy a house.
Okay.
Get pre-approved, obviously.
But I haven't got my money yet. I don't know.
But if you have a ballpark idea in your mind of what you're getting, or if you filed and you're just waiting for it, we don't need to show that
Right.
money in your account the day you apply for a mortgage. We know that's coming, so we can count that towards down payment, or if you're needed to pay off credit cards or whatever it might be.
Yeah, so I was gonna say, like, I'm not gonna apply for a house yet. I'm devil's advocate.
Right.
Horns.
Yeah, for sure.
Insert horns here, right? I'm not gonna apply for a house yet because I want to pay off my debt first.
I would also have a conversation with your loan officer, mortgage advisor first before you take, let's say your refund's $10,000, take all that money, pay all those credit cards off, and then you don't have that money towards down payment, that kind of thing. Sometimes you don't need to pay off credit cards to qualify. You can do that after. We don't care, but it makes more sense to have a conversation before you just run out and do that.
We say it over and over. Our job is to educate and empower you to make great financial decisions. That does not by any means mean a commitment in any way,
No.
right?
Mm-mm.
But the education, we have the tools that you guys don't even have access to or you guys don't even know about.
Right.
We literally have a system that we can take your credit bureau and go, all right, you're a 647 score. We want to increase score to whatever, and it'll tell us exactly what to do. Or we would say, all right, if you pay down this much in debt, it'll say what your score will be. If
Yes.
then, like, we have all these different tools. It's phenomenal. And you can say, all right, well, I'd like to pay down, these two credit cards using $5,000. What would that do?
Right.
Boom, boom, boom. And then we can run the numbers and say, listen, you don't need to pay it. Like, I get that you want to, right? So we need $5,000 for a down payment. Let's keep the other $5,000 in your bank account.
Yes.
Because if you pay off, by the way, if you pay off a credit card, it can actually hurt your score. If you pay off collections, that's a bad
whole-
one.
Right.
Yeah.
Right.
So don't do anything with your credit, anything if you
No.
want to buy a house, until you talk to a mortgage advisor that has the tools in place to give you the exact knowledge you need to make great financial decisions,
Exactly.
right?
Yes.
So paying off debt's not a bad thing, or paying down debt, right?
Right.
Not a bad thing, but know first if you should,
Exactly.
right? Down payment's great. It's obviously very easy to understand. You get money, and you didn't have a down payment. Now you do. Now you qualify.
Yes.
Great.
The other thing that sometimes plays a role, a lot of times plays a role into an approval, is how much someone has in reserves, which is basically the principal and interest, taxes, insurance times a certain number of months. Automated underwriting likes to see that if you'd lose your job, you would have money to fall back on to make that payment. If you spend all of your assets on paying down credit cards, that kind of thing, and all you have is down payment, but you don't have reserves, that could affect your approval.
Right, and you can hinder yourself from buying
Exactly.
a home. So everything's based off risk, right? They're trying to limit risk, and you take a person with a 780 credit score, putting 20% down, with a long job history. It's what we call a vanilla loan.
Right.
Like there's no variables. They have great credit, great income. DTI is low, debt to income ratio.
Right.
Right. They're not going to require reserves. They don't.
No.
They're a pretty safe borrower.
Yes.
Somebody with a 627 credit score that maybe doesn't have a very long job history, that kind of stuff that they're doing at FHA, maybe they're going to want 2 months, 4 months, 6 months type reserve. Reserve funds sit in your bank account, never touched or anything. They just sit there, right, to be used as another layer to reduce risk. And after you
Exactly.
close, you could end up using that funds and it'll be fine. But it's just something to think about, especially if you're on borderline
Right.
qualifying, right?
Exactly. And the other
Oh.
thing, sometimes, a gift can be used for down payment. We do that all the time. But there is also an additional risk if you're using a gift versus using your own funds. I've seen approvals, yes, to know
ineligible, yeah.
because it's gift funds and not. We'll know that ahead of time when we run the findings. But again, once that money's gone, it's gone.
Yeah. If you watch, I don't know, 100 of our videos, I think 99.9 of them will all, it's a common theme. Talk to your mortgage advisor first.
Right.
Happens multiple times every single month. People assume they make their own educated decisions, which they don't know our industry, and they hinder themselves from buying, or at least delay themselves from buying a home. When it could have just been smoother and easier if you would just talk to us.
Right.
Right?
Exactly.
That's what we're here for. So, tax money. There you go. Things to use it for.
Yes.
You sure I can't buy a car?
You can if you don't want to buy a house. I mean, I'm not saying that never to buy a car, but it's a depreciating asset where a home typically isn't.
Yeah, almost never.
Right.
Even if it is in 1 year, it's not the
Right.
fixed usually.
Right.
So that's where we talk about using a mortgage as a tool to build wealth. This helps you leverage the cash that you have coming in for the down payment to get the thing that actually helps you build wealth.
Right.
Home. Cool.
Yes.
Hopefully that all makes sense. If not, give us a call. We'd love to talk through it. If you have any questions about your credit or any of the stuff that we talked about, we'd love to have that conversation with you.
Absolutely.
Right?
Yes.
Cool. You want to do our closing?
Yep.
Do it.
Mortgages are complex.
Let mortgage nerds give you the answers you need.